Hello, ladies and gentlemen, students and instructors. This is Anthony Woods once again, here to introduce you to some software I created based on financial statements. Financial statements are corporation records that they use to keep track of their various expenses and profits, revenues, payables, and they use these statements to help them input and process their taxes, for instance, and to give stockholders and management information on various expenses and revenues generated in their company. It could be a corporation use or a business use. But for demonstration purposes, this is a good tool for students and instructors to use in their accounting and finance classes. I also included a little calendar here just to indicate what date you're on once you bring up the software, once it's downloaded. Let me bring your attention to this field here called Clear Fields. You can clear any of these amounts based on clicking on this button in these text boxes. You can clear the dollar amounts or anything that's entered in there inappropriately or within error, as an error. Click on that. So the first statement we're going to process here is going to be the income statement. That's the statement that shows you what you've taken in as far as your revenue, and it shows a listing of the various expenses, which is calculated, which calculates the net income, which is revenues minus total expenses, and that will give you the net income. That's revenues minus total expenses, give you the net income. Okay, so what we'll do here is once we complete this, we will see how this net income amount flows into the retained earnings statement once we have these fields calculated properly. We'll start by inputting some values here for service revenue, and then we'll enter various expenses. Salaries expense of $5,200, $1,500 for supplies expense. Rent expense with $900. Insurance expense $50. Interest expense $50. Depreciation expense $40. And once you're done with these values, and by the way, you only input whole numbers, no decimal points, no special characters, and no alphabetic characters. So just numeric whole numbers, dollar amounts. Okay, you can enter them in hundreds, thousands, 100,000s, millions, and billions of dollars here. Remember, whole numbers, no decimal points. Once you do that, you can press the button to calculate your total expenses right here. Oh, sorry. You can press the button to get a better view of the editing on the dollar amounts. Once you click the calculate button over here on this side, you'll get the total expenses. Okay, as well as the net income. It will do these calculations for you automatically. Okay, well, we have some good dollar amounts here. Total expenses is $7,740. Net income, which is this revenue or service revenue minus total expenses, comes to $2,860. Once we are done with that, we will now go to the retain earnings statement. We will click this button to go to the next screen. And as you can see, the retained earnings statements for the month ended fictitiously October 31st, 2014 shows up, and you can input a value, let's just say of 0. Okay, you see it brought over the $2,860 net income amount that was calculated on the income statement previous screen by simply subtracting the service revenue from the total expenses. It brought that right over. Now we want to put in our dividends, which is, let's just say $500. Okay, we're going to enter that. Okay, and we want to calculate this value here, which is the net income value minus the dividends. Is going to calculate actually the retained earnings for October 31st. We'll click on the calculate button. As you can see, looks good. This amount of the retained earnings amount here is 0. Added the net income of $2,860. We come up with $2,860 minus the dividends that were distributed to come to the retained earnings value of $2,360. Once we have that, we can proceed to see how the balance sheet is calculated based on this value here, the retained earnings of October 31st. The balance sheet, that amount will be transferred over into the balance sheet for XYZ Corporation, for instance, and that's a fictitious corporation. I just thought I'd put that name there for demonstration purposes. Okay. Once again, you got a clear field here. If you want to input, if you make a mistake on the values, you can clear the fields right here, and by clicking on this button. So let's go to the balance sheet and see what comes up there. Okay, it's just up a little bit. Okay. Okay, just a little bit. Excuse me. Keeps popping up like this. I'm just trying to move it up. Okay, I think everything's on here now for the most part. Okay, and as you can see, look at the retained earnings amount. It brought it over from the retained earnings statement, and that came up to $2,360. Okay, look at how this data flows from one statement to the other, from the income statement to the retained earnings statement to the balance sheet. Okay. Okay, yeah, accounts payable amount. Okay, of cash. Let's say for our assets, we're going to input our value once again. It's whole numbers. You got clear field here. Okay, clear field here in case you make a mistake. And now we can input our values here. Let's just say for cash, let's put in 15,200. Okay, and then accounts payable $200. Let's just say $1,000 for supplies. Insurance $550. Okay, $4,960 for office equipment. Okay, we skip down to notes payable, $5,000. Accounts payable. This is liabilities and stockholders' equity values here. Accounts payable would be $2,500. Okay, $50 for interest payable, unearned revenue. Let's see, $800. $1,200 for salaries payable. Okay, you don't have to worry about total liabilities. That's this figure here. That'll be calculated once we hit the calculate button. Once we hit enter, first to look at the dollar amounts, make sure they're in put it correctly. We can hit the calculate button after that. Now we have common stock of, let's just say, $10,000. Okay, we can input that there. Let's see what else. Total stockholders equity. Let's say 12,360. Okay. Okay, and then let's hit the enter button. That looks good. Those dollar amounts look very good. Be careful that you only input dollar amounts. And we want to calculate this total liabilities right here, and the total liabilities and stockholders equity. Oh, I'm sorry, and the total assets. total liabilities, total stockholders' equity. Ready? Okay, that looks good. So this is the total assets from these accounts, these cash and accounts payables and other expenses or values comes to 21,910. The equity liabilities, stockholders' equity that the company is on the line for comes to a total of $9,550. If you take the common stock and retained earnings, that comes to $12,360. Okay. This value, the total assets should equal total liabilities and stockholders' equity right here at the top. Both these values should balance out and equal. Total assets, total liabilities, and stockholders' equity. Which is, let me see, okay. And that's the total liabilities plus the total stockholders' equity, which is $21,910. Okay. If you want to clear the fields, you can by hitting this button, clicking this button, and you can clear the fields and input different values if those amounts are not correct. Okay, and from there we go to the last statement, general statement that we use, that corporation use. It's called the statement of cash flows. We'll click on the press here for the statement of cash flows button, and now we get to the statement of cash flows screen, menu screen. We would input our various values in there, such as cash flows from operating activities. Let's enter a cash receipt from operating activities of $11,200. Okay. Cash payments for operating activities is a negative value, so we'll enter minus 5500. Okay. And then there's another negative value of purchased office equipment. That's money that we have expended on office equipment, minus $5,000. Okay, net cash provided by operating activities will be calculated based on this value subtracted from this value. Cash receipts from operating activities subtracted by cash payments for operating activities. And they'll give us this value once we calculate the values. Once you hit the calculating button, that is. Okay. We got other fields called cash flows from financing activities, issuance of common stock. Okay, that's $10,000. Okay, the $5,000 for a note that's payable. Payment of dividends, $500. It's a dividend amount that we dispersed to our stockholders. Net increase in cash, we will have a value there of $15,200. Okay, and then cash at the beginning of period should be 0. We're starting out with our income statement based on that value, that cash at end of period. From the very beginning, hit enter. You see those values there are negative. Okay. Now we're going to calculate these values. We're going to calculate the net cash provided by operating activities, net cash used by investing activities. We're going to calculate net cash provided by financing activities and cash at the end of the period. Okay, that looks good. We got net cash provided by operating activities, which is cash receipts subtracted from cash payments for operating activities. That gives you $5,700. Okay. These values are the same here. Purchase office equipment and we have no other values. Net cash used by investing activities, negative $5,000. Okay. Now we have, let's see, okay, 14,000. Net cash provided by financing activity is 14,500, and that's this value and this value minus 500. That's what we come with net cash provided by financing activities, and that's simply issuing the common stock and issued the note payable. That comes up with this amount. Net cash provided by financing activities. Okay. We inputted the $15,200 here. Cash beginning period 0. We should come up with this amount right here, which is 15,200. Oh, these values should basically be the same. Okay. That ends our presentation for how various data, various dollar amounts in each statement flow into one another, and how they're calculating various expenses and various revenues, payables, investment activities, stocks, and dividends. I thank you for your time.